Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday, the 23rd of December. Starting off with the FTSE 100, where we may have an opportunity on the long side now. The rising trend channel there from September last year. Floor of the channel there at 80.70. We bounced off that back in November, and after a little bear trap, we've down towards the 8,000 level. We've bounced again. While there's no end-of-day close back below 80.70, we're looking for the 200-day moving average maybe over the next week or two. And that's up there at 81.80. RSI at 34, so not quite in the oversold level, but you can see from the recent past that any approach of the RSI 30 area has been a potential buying opportunity. Next up is the DAX, and here fireworks of a negative kind in the recent past. We had a bull trap island reversal, gapping up at the beginning of the month and gapping down twice. Later this month, we've still got the sticking point of the top of the second gap there, around 19,950. While there's no end-of-day close back above that, we've still got the risk of a test of the 50-day moving average at 19,600. But it does look as though the worst is over, especially given the way that the RSI is only just below the neutral 50 level and seems poised to regain that particular RSI level. Moving on to the Dow, and here we escaped that rising trend channel from back in August. We managed to bounce off the floor of the November gap there, around 42,300, with a key reversal to the upside on Friday, which is quite impressive. I still want to see this market back above that 50-day line, 43,400, to then give it a pathway up towards the best levels of the year, 45,000. But in the meantime, we're kind of in limbo, although we have that gap floor there as a potential support for this market. Obviously, the next level down there, 41,600. But that key reversal to the upside and bounce off RSI 30, the oversold level, does suggest that after multiple days of downside, this market has found a near-term floor. Moving on to Bitcoin, which had a rug pull, which we were rather expecting, I suppose. But here you can see that another test of the 50-day moving average there. We had one last week and one today as well. That's at 93,400, but at least while we're above that, still looking for the uptrend and the breakout to continue. Ideally, we get back above recent resistance around 97,000 and then push to the record levels through 108. On the downside, worst we're expecting at the moment is a new leg to the downside on a break of the 50-day line, taking us back to the old support on the way up at 85,000. RSI at 46, so that would rather imply that we might have a push below the 50-day line before we recover again, if obviously we recover. Moving on to gold, and here a picture is of a market which has done a bit like sort of copy the FTSE really, with the bounce off the floor of that rising trend channel. In this case, it's at around 26.25. It's an uptrend line from February. And above that, looking for the market to close that gap down that we had 26.50 and then head up to the top of the range through 27.50, maybe by the end of next month. But the key here is that we put in a higher low versus November. That was around 25.60, and we can progress from there. Moving on to the stocks, and starting off with Asiamet, which seems to be quite well poised at the moment. We've got rising 50 and 200-day moving averages that suggest that we're in a golden cross, and the run up to a golden cross tends to be the strongest part of the cycle. I think directors getting fees in shares today has helped the cause, and the initial target here towards a penny. Above that, obviously, then we're looking for the May resistance at a penny and a half. But at least while we're above that 50-day line at 0.72, feeling quite chirpy about this market, especially given the RSI rebound at neutral 50, which tends to be a leading indicator on the upside. Situation which is perhaps a little bit more fraught than the Asiamet situation is Beacon Energy, in the sense that we've had many false dawns here, and this may be yet another one. But on Friday we had a decent candle there, opening at the low, closing the high, and so far we've done the same for Monday, and we've broken the 50-day line in a more convincing way than we did earlier this month. End of day close above that 50-day line, 0.004, and we're looking for the top of the channel there, 0.007. by the end of next month. And you can see that the shares like having the odd spike to the upside, which tends to be sold into. But the key here is staying above 0.003 if we can do that. On to Goldstone, which has a bit of a reprieve on its convertible loan, and the shares back in that rising trend channel that we made for it some time ago. The floor of the channel there, 0.96 pence, and the floor of the latest gap as well. And looking for this market or this stock to head up to 2.2 pence, perhaps by the end of next month. Helped along by the way that we've had a bear trap island reversal, so gapping down the beginning of this month and then gapping up now. So that tends to be a strong setup. We'll see one of those later in this video. The 50-day moving average also rising, and the RSI also through neutral 50. So ideally, we can stay above that 50-day line. We're feeling chirpy there. On to GSTechnologies, which continues to impress at the moment. We're right back at the top there of the range, equaling the high that we had on the 17th. V-shaped bull flag, as I call it, and an unfilled gap to the upside. We've had quite a few of those over the recent past, as well as the golden cross last month. Above 2 pence, looking for up to 2.9 pence, which is the upper parallel and the third target for the shares in the recent past, hoping for 2.9 pence by the end of next month. Ideally, we stay above the recent support area and old resistance from last month at 1.6, above 1.6, looking for 2.9. On to Georgina, which looks like it's overshot to the downside. Anything below 8 pence looks a bit low at the moment, and we closed the gap there, the gap down from last week at 8.25. End of day close above 8.25, and we're looking for 11 pence by the end of next month as a gap close, a bear trap gap close buy signal on that particular situation. Moving along to OPG, otherwise known as OPG Power Ventures, and here the bear trap gap reversal from below the November support there at 5.25 pence. Working well above that, we're looking for the top of this falling trend channel as high as 8.8 pence by the end of next month. Initial target, obviously, the 50-day line at 7 pence, but looking quite chipper there while we're above that 5.25 pence area. Onto a stock which I don't look at very much, largely because it doesn't look as though it's most liquid stock in town, but just the first hint here that Proteome is going to turn around within a broadening triangle base in place since February. 5.25 pence, the top of the channel there. Maybe looking for that by this February, while we remain above recent resistance at 3 pence, above 3, looking for 5.25 on the Proteome chart. Rockfire, very active situation at the moment, in between fundraisers, etc. And we had that big bull trap spike there through to 0.26. That's our target at the moment, while we remain above recent support at 0.15, or call it 0.16 in fact. RSI's bounced twice now on the at and above the neutral 50 level. So that suggests this is a good consolidation, and we could head up towards the top of the triangle there, near to 0.3 pence, while we're above the 0.16 pence area. On to Rome Resources, which seems to be getting strategic funding at the moment. And here you can see that the idea that we're in a rising trend channel just about in place here. We've had a gap close buy signal today, so that is impressive, or in fact on Friday. And above 0.33, the top of the gap there, looking for the shares to at least head up to 0.41 pence, which is a resistance line there from the end of October. But the key here, staying above the top of that gap there at 0.33. The other thing which would seal the deal would be a decent end of day close above that sharply rising 50-day line, which is also a positive technically at the moment. Big injection for Seeing Machines from Mitsubishi, and it looks as though one or two people guessed in the last couple of weeks that might be on its way. We've gapped through the 50-day line and the 200-day line in the recent past, at least while we're above that 200-day line at 4.5 pence, looking for as high as 5.8 pence at the top of that broadening triangle from April as a best case scenario target. Moving along to the last two. The first one is Zephyr, which had some rig news today, and here we've gapped up above the 50-day line, still looking for the top of the range and the 200-day line there at 4 pence by the end of next month, while we remain above recent support at 2.9 pence, and a bit of bullish divergence in the mix there at the moment too. Finishing off with Zenith, which had its big arbitration news last week, and it looks like the penny's starting to drop and the share price starting to rise. We had an initial target there at 2.3 pence. That's been blown away, and the second target now, in the wake of the $9.7 million award, is up to 3.9 pence. We're looking for that by the end of next month, or we were, and now we're probably looking for that by the end of this month. But let's see if Zenith can deliver the goods. Ideally, we stay above the high of Thursday at 2.65, ahead of a move up to the 4 pence area. That's it for me today. More updates tomorrow.